What do you make of the markets the last couple of weeks? Yields have been moving. Seems a lot of money shifting from high growth into what they perceive as value. It has been quite the seismic shift. Do you think it will continue?
Yeah, really good question, Brian. We've been in a market that has been very volatile, and certainly for the past couple years, supported by central bank policy, a market that's been driven by growth and momentum. And I would say for the past several months, we are now seeing a break in that as investors that are focused on valuation-sensitive approach, looking for companies with free cash flow and earnings. It's really quite exciting times. Can't predict what volatility is ahead, but as we've seen, the economy does seem to be in good shape post-pandemic, and so lots of opportunity for active managers to find well-positioned businesses.
Such as, Ingrid, what? I mean, because so many stocks did so well in 2020. Valuations, I'm not saying they got crazy, but 150 times sales, okay, maybe a little optimistic. Investors seem to have rethought some of these positions. What looks like it still holds value to you?
Yeah. So as I said, we like companies with earnings and free cash flow growth because as we look ahead, that's what we think will support market appreciation. Take a look at the theme of electrification. Everyone's talking about decarbonizing the economy. How do we live in a world with less emissions? And the news of the weekend are OEM after OEM committing to electrification of automobiles. You don't have to buy a single auto manufacturer that has 3 models. You can buy companies like Texas Instruments and Aptiv, both that support the electrification of transportation, also involved in active safety, clear secular themes. So yes, we're all tied to the macro when you invest in equities, but really trying to find spots where secular growth has long-term trends that will support earnings and free cash flow. So follow the cash.
I had no idea that Texas Instruments was sort of part of that electrification. I assume, obviously, it's on the semiconductor side as well. Is that kind of what you're going for then, Ingrid? Maybe some of these second or even third derivative plays that they're not Tesla. You're not knocking Tesla, but they're not directly related, but they have a business that benefits from that trend. Because honestly, I had no clue that TI would have been part of that movement.
Absolutely. Automobiles is a big vertical for them. Think of analog chips everywhere. If you want to take a real-world signal, put your foot on the brake, and turn it into digital to be able to electrify vehicles, active safety, all componentry that requires Texas Instruments, as well as Aptiv. Two players in the electrification secular growth that might not necessarily be obvious to investors. We're less inclined to make a binary bet on who wins this race and more interested in buying companies that have earnings, free cash flow, strong returns on invested capital, but are also supporting the longer-term trend of greening of transportation.
Yep.
Shepard Smith here. Thanks for watching CNBC on YouTube.